So a $500 billion AI company is using the same accounting firm that audits your local church bake sale. So OpenAI's auditor has just 12 employees. That's fewer people than work at your neighborhood Starbucks. So how does a company burning $74 billion trust their books to a firm designed for nonprofits? So now, meanwhile, Google just passed Microsoft in market value, and Gemini 3 is demolishing everything in its path. Sam Altman himself even admitted that Google's creating, quote, temporary economic headwinds, and I think that's putting it nicely. And this is corporate speak for we are getting destroyed. So today we're going to expose some of the reasons why OpenAI's house of cards is collapsing in spectacular fashion, as we've been predicting on this channel for a long time. Let's dive into this today. All right, the AI wars just took some interesting turn over the last week. And while everyone's been watching ChatGPT, Google quietly built an empire that's about to crush everyone. Now, I've been predicting this for a while because who's the king of data? Well, it's Google, of course. And that tiny auditor, well, they're the smoking gun that's going to prove that OpenAI's entire business model is built on circular money flow and that they've been hiding stuff. And that's part of the reason why they're using this. So I've got some pretty interesting stuff to dive into today. So we're going to take a look at this and we see why the smartest money is turning tail and running from OpenAI. So let's jump into a lot of these articles because I've got stacks. And I had to actually kind of stop collecting stuff because pretty quickly this became so damning for OpenAI that I was like, whoa. So OpenAI CEO Sam Altman acknowledged to employees in an internal memo last month that Google's recent AI progress could create, quote, temporary economic headwinds for the company. Now, the memo expected the Alphabet Google company unit's launch of a Gemini 3 model and suggested OpenAI's once dominant technology lead is narrowing. So that moat that he's been like kind of doing everything or kind of resting his laurels on is not here anymore. This is mainly due to the crucial pre-training phase of AI model development where OpenAI has faced challenges. Earlier this week, Google started rolling out Gemini 3. We've talked about it. They've got the new crown. However, in spite of these challenges, Altman assured his staff that OpenAI, which is partially backed by Microsoft, would catch up and is focused on ambitious long-term bets, such as automating AI research. Now, I think this is like very optimistic. And, you know, of course, let's turn to Reddit and see what everybody else talks about. But its revenue collapsed to 5% as OpenAI races to catch up with Google. Let's see what the comments said. So admitting they've fallen behind Google is a big step. Google's barely going to hold Sam Haight is pretty justified considering he lied constantly to the board to the point where Ilya tried to oust him. He also lied about not knowing about the non-disparagement clause that took away employee shares in OpenAI if they criticize the company since he signed documents describing it. There's a lot of people talking about it here. So this isn't a great take. Sam Altman just admitted that Wall Street refused to price it. A November memo leaked 3 days ago reveals OpenAI warning employees of rough vibes and potential revenue growth collapsing towards 5%. So if they're only going to grow on revenue at 5%, but they're spending on over 20 to 50% every year, and I know that's a big range, 20 to 50%, but like it's huge. So this was written before Google launched Gemini 3.0, which actually came out even stronger than even they predicted. So Altman praised Google's excellent work in the same memo where he declared a shift to wartime footing. Now, you would think that wartime footing would have come like a couple of years ago, right? So OpenAI is valued at $500 billion. Annual revenue should exceed $20 billion this year, but I think even that's optimistic, and most of the reports that I'm showing are showing that they're not going to hit $20 billion. Cash burn will surpass $8 billion. So that means they're spending more than that $20 billion. Internal projections show cumulative losses reach $115 billion by 2029. So where does profitability come, right? The forward sales multiple sits near 25 times pricing in perpetual hypergrowth that the CEO himself just questioned. So Google holds $98 billion in cash. So let's look at these numbers here again. So Google's sitting on $98 billion, right? And that's probably Google could turn more revenue if they wanted to pretty much anytime. But see, this is how much OpenAI is going to burn by 2029. Google's sitting on that in cash. 4 billion users across search, So we keep hearing OpenAI be like, but we've got 700 million users. Okay, Google's like, hold on, I got 4 billion, right? Custom TPU now, and this has been a lot of the big talk over the last couple of days, eliminates the margin drain of renting renting NVIDIA hardware, Gemini 3 now runs natively across the entire ecosystem. The company trades at less than 8 times trailing revenue. So this is not a product competition. This is a structural mismatch. And that is the understatement here. One company must convince investors that losses exceeding $100 billion will eventually convert to profits large enough to justify $500 billion valuation. The other company already owns the distribution, the data, the chips, and the users, trading at a third of the multiple while printing tens of billions of dollars in annual profit. Like, guys, this is what I've been predicting for a long time. Like, I saw this article that was like, oh, Gemini might have access to your Gmail. And I'm like, doesn't Google have access to my Gmail for like 20 years? I mean, I think I got Gmail. I think I went back and looked, and I think I got Gmail in 2023. It was 2024, or sorry, 2003 or 2004. They've had my data for like 22 years, right? So I just sit here and kind of laugh and think, this is the part that nobody can quantify. So if AI power centralizes inside a platform that control infrastructure rather than the lab they rent, the entire venture capital thesis underlying OpenAI collapses. And that is what we're seeing here, folks. Microsoft's $13 billion stakes buys time, not immunity from mathematics. See, here's the thing. To Microsoft, $13 billion is a bad quarter, right? Like, that's nothing. To OpenAI, $13 billion shows that their investors aren't going to hand them another dollar. So this memo leaked in November 21. The market has not processed what it means. So this was a couple of days ago. I'm going to give it. So like, I don't remember how many days ago this was, but it was a couple of days ago, and this was the article. Now let's talk about this here. OpenAI can't beat Google in consumer AI. So yesterday Gemini 3 release, so this was a couple of days ago, with major competition implications. So I wanted to put out a quick note here. I read the whole thing, but we'll just even go off the headlines here, because that's all we do is read on the headlines. I'm kidding. We don't just read on the headlines. See, the thing about it here is they're even just saying that that Google can't, and it's not just because Gemini AI. What this article actually went to talk about is that Google owns the data. They own the data, and they can't beat Google because the other part too is Google has the revenue pipeline. Now, let's dive into another part. This has been a really big smoking gun that's coming. So OpenAI's governance gap exposes Silicon Valley's circular reasoning. So circular capital machine, right? So a $500 billion company building artificial general intelligence relies on a 12-person accounting firm. The implications extend far beyond one startup. By the conventional measure of corporate governance, OpenAI presents an impossibility. The organization projects $12 billion in revenue for 2025, and that's actually closer to the number. The other number I was reading said 20 billion. It's actually projecting closer to be just a little under 13. Commands a $500 billion valuation, and sits at the center of a $1.4 trillion infrastructure commitment spanning the world's largest technology companies. Yet, according to the IRS Form 99 filing by ProPublica's database, OpenAI's financial audits through fiscal year 2022 were conducted by these guys here, a San Francisco boutique firm with approximately 12 professionals specializing in nonprofit and early stage entities. So no public disclosure announcement or announced a change in auditor since those filings. No Big Four accounting firm, right? For context, 98% of S&P 500 companies retain the Big Four auditors, a concentration driven by the preference, not by preference, but by practical necessity. And so this auditor gap would be merely curious in isolation. What transforms into a systematic concern is the architecture of the capital flows that OpenAI both enables and depends on. A structure that investment analyst Michael Burry recently characterized as a fraud flywheel in a social media post backed by the network diagram mapping inter-firm transactions. So this is that circular transactions that we've talked about, right? So it gets even sketchier because the mechanics are straightforward and extensively documented security filings. Microsoft's invest $13 billion. They invest to ChatGPT. ChatGPT buys this. They buy it from NVIDIA. NVIDIA goes into others. And so we see this circle over and over again. Now, Google exhibits identical patterns through its investment in Anthropic and provision of Google Cloud infrastructure. So other people are doing this as well, and this is part of what we're seeing. But here, the small auditor becomes critical. 4 big firms maintain extensive internal controls specifically designed to trace revenue sources, identify related party transactions, and assess whether reported performance reflects sustainable business economics or accounting artifacts. They employ thousands of professionals, proprietary analytics platforms, and decades of institutional knowledge about how complex organizations obscure material information. Boutique firms lack this infrastructure by design. So they're saying this 12-person nonprofit firm, entities with a simple cap table, is designed for people with a simple cap table. OpenAI's is nowhere near simple. This is not a criticism of them. It's a structural observation. The firm lacks capacity to perform the audit that OpenAI's current scale demands. So what does that mean? It means they're missing something just because there's not enough. It's not big enough. Such an audit would likely require a team of 50 or more professionals working for 6 months with access to internal communications, board minutes, and transaction ledgers. The cost would approach $10 million. A boutique firm cannot marshal those resources. So what the author here is pointing out is that this creates a regulatory void. Public companies with $500 billion valuation face extensive mandatory oversight specifically calibrated to protect systematic stability. So see, this is what, and so it just gets down to really, and I'm going to kind of skip to the end here because it's really long and he goes through a big citation here. But he says the small auditor is not the problem. It's a symptom of a system that has allowed private companies to reach scale requiring public level governance without subjecting them to corresponding oversight. Addressing this does not require hostile regulation of AI. It requires extending transparency and accountability norms that public markets have developed over a century to private entities whose systematic importance matches or exceeds most public companies. See, when you have a company that's worth $500 billion, there's a lot that depends on it just simply because of its size. So where Altman is saying OpenAI is too big to fail, the author here is saying, look, they're too big to not be being regulated more closely. And I agree with them here. I think this is a huge problem. So he goes on to talk here, and he says, so this matters because Michael Burry exposed the structure. OpenAI reports $3.7 billion in revenue, which we've talked about. IRS filings confirms the same small auditor. So the number tells the story. NVIDIA's 2025 earnings show 45% sales going to 3 hyperscalers who are simultaneously OpenAI's investors and customers. When you map the actual money flow, over 85% traces back through these closed loops. Strip away the circular transactions, and organic end user demand appears to be under 1% of the reported ecosystem. Yeesh, that's scary, right? So he says you can go verify it yourself. OpenAI's trust portal confirms SOC 2 operational control, not financial audit scope. No Big Four announcement exists in any public disclosures. So, like, as he says here, the math doesn't lie, the structure is documented, and nobody's asking the obvious questions until now, right? Everybody was really happy throwing money at OpenAI while they thought they were going to reach AGI, right? Which we've been talking about for a long time here wasn't going to happen. And this is really going to be the nail in the coffin. Google went from 5% to 14% before Gemini 3 launch. And who's the blue line going steadily down over the last 12 months? That's your friend, OpenAI here. Whereas Gemini is quickly catching up. And I promise you, after Gemini 3.0 launch, we're going to see, Similar Web report some of these numbers in a month or so, and you're going to see Gemini at least double. My anticipation is triple, and it's all going to be at the expense of OpenAI. You're seeing it from celebrities to big names online. OpenAI is going to get absolutely slaughtered in this. So Google just passed Microsoft for third place globally, hitting $3.6 trillion where Microsoft flatlined. This happened right after OpenAI partnership launched. The market's repricing reality. Microsoft went in on all-in on external dependencies while Google owns every piece of their stack. They own the TPUs, they own the data, they own the training, they own all of it. Google controls silicon to model economics while Microsoft rents everything at retail price. The $130 billion gap shows investors finally understand vertical integration beats partnerships. So NVIDIA's 2025 earnings show 45% of sales going to 3 hyperscalers who are also OpenAI investors. Microsoft invests in OpenAI. OpenAI buys Azure Compute. Microsoft buys NVIDIA chips. It's circular. Strip away these transactions, and like we said, 1%. So over 85% of the money traces back through these closed loops. So Altman warned insiders last month that Google's progress creates temporary economic headwinds, but really, Google is about to eat their lunch. Now, Google's TPUs run their models 40% more efficiently than equivalent GPU clusters from NVIDIA. They designed and manufactured chips specifically for their workload, total optimization. Microsoft announced Copilot features in November 2023. Google shipped better AI 6 months later at half the cost. Google's not selling TPUs externally just yet, but there's some news that they're in talks with Meta right now, and Google's on a tear because of it. So, like, you can take a look here at Google's stock here. So let's go look at our Google stock ticker. Let me pull this up here so we can see exactly where the Google stock is right at close. So we can see that, look, they've had a good day today. Last 5 days have been great, 12% climb. Over the last month, 19% climb. And over the last year, or last 6 months, 86% climb. Now, year to date has been a little bit less. They did dip because there was all this antitrust stuff in here. But since then, we've seen this steady climb on Google. And over the last 1 year, 91% increase. And on the 5 year, 260% increase. I think we're actually just seeing Google start their warm-up lap. I think Sundar Pichai has been doing a really excellent job of navigating all of this. And I think they're going to eat Microsoft's lunch. And I definitely think OpenAI is absolutely in trouble. So OpenAI is reporting $13 billion of revenue, but needs $200 billion of revenue by 2030 to break even. So the auditor can't even verify if Microsoft's payments are real revenue or circular investments. Now, OpenAI committed $1 trillion in computing through 2030 with money that they don't have. And Google's just using their net revenue from the money in their pocket. This is real money, real business. OpenAI has signed $60 billion with Oracle, $18 billion for data center, $10 billion for chips. So earnings seasons will expose if circular transactions drive over 50% of sector growth or not. Now, Wall Street's already selling, and smart money doesn't wait for official confirmation. So Google's profitability versus OpenAI's losses will trigger mass exodus from OpenAI's investors. And I think we're going to see a lot of move toward Google over the coming weeks. So I'm curious to hear what you guys think. Do you agree? Do you disagree? I'd love to have a great discussion. Best compliment you can give me is leave a comment down below and make sure you like and subscribe. Here at Starter Pack, we love to build custom software solutions for companies. So reach out if we can help your company. Check out starterpack.com and here's some great information about our services.
Hi, I'm Spencer, a fractional CTO. With over a decade of executive leadership and 25 years in software development, I've transformed technology teams and products for businesses just like yours. As your fractional CTO, you get the strategic guidance of a seasoned technology executive without the full-time commitment. Perfect for companies ready to leverage cutting-edge technology without expanding headcount. My team at Starter Pack has already built advanced AI agents for small and medium businesses, automating complex workflows and delivering advanced ROI to human workflows. We specialize in creating custom software that connects your systems into a single coherent technology ecosystem. Our development approach focuses on tangible business outcomes. For one client, we developed AI-powered workflows that cut days off of human processes. For another company, by connecting multiple systems, we reduced processing time to increase their ROI by over 75%. We don't just write code, we architect solutions that scale. Whether you need cloud system architecture, data integration between legacy systems, or custom AI agents that automate your unique business processes, my team delivers results that exceed your expectations. Having led technology for a lot of companies and launched 7 successful brands of my own, I bring battle-tested expertise to your business challenges. Our specialty is turning technological complexity into business advantage. So if you're ready to harness the power of AI and custom software to drive your business forward, let's connect. Together, we'll build technology that doesn't just solve today's problems, it positions you for tomorrow's opportunities. Technology leadership, decades of experience, AI powered. Reach out today and we can help you. Check out starterpack.com